What I do is inconsequential. Why I do what I do is I get to shorten people's journeys every day. What I love about our hospitality industry is that it's our mission to make people feel cared for while on their journeys. Together, we'll explore what hospitality means in the built environment, in business, and in our daily lives. I'm Dan Ryan, and this is Defining Hospitality. Okay, today's guest is a proven, articulate thought leader in our industry. He's delivered exceptional results in strategic management, operation, sales, leading development and acquisition efforts in our hospitality industry. He's a recognized lodging and restaurant industries. He's the Chief Development Officer at Sonesta. Ladies and gentlemen, Brian Quinn.
Hello, Dan Ryan. How's it going?
Oh, it's so good. It's so good to see you. And I've been talking to a lot of people on your team to kind of get this all set up. And one of the things that I've been most excited about, and we'll get into it in a bit, is throughout the pandemic, I saw, like, in our industry, there were people who went away. There were people who just battened down the hatches and got super defensive. And there were a few people and companies that really pushed on the throttle and said, this is a time for growth and opportunity. And in the last category, I feel like maybe I can count those on like one hand. And Sonesta is definitely one of those that looked at this as a once in a lifetime opportunity. So before we get into that whole story, because I think that whole idea of abundance and growth and what the future is super exciting. You've been in hospitality since 1991. You started in the midst of a recession after the savings and loan, and I think it was also the Gulf War was raging. Like, what do you love about hospitality?
I think it's a lot of us from all the different parts of the discipline, whether it's the design side, architecture, development, ops. It's really about either falling in love with the industry or not. And I think ultimately it calls for, loving people and a high EQ. And I think you have to recognize that our broad industry is different. We are required to be hospitable in the hospitality business. And those are two H's sometimes that are hard to get out of your mouth, but I really mean it, right? We have a different care and concern for our employees because they deliver our product, right? And we are really all joined together. A great design idea really only comes to life if there's someone willing to put it in their building. And is that rooted in something that the consumer needs, and can they get a return on it, right? So I think we are all linked together. We're all in the industry for a reason, because we do have that maybe connection to the human condition and an overarching need and ability to be with others that are like-minded and to care for each other. But I do believe we do have a duty to be hospitable in the hospitality business. And on occasion, when different people or enterprises get off that path, you can see that, they're off their strategy, because the hotel business, travel, tourism has to have that root. It's why we're able to come to market different with our products, and why we all try and take care of each other and bring everybody along on the journey.
And for your whole career, you have the hospitality bug. You've never strayed out of it. You've been in it since even before your official career started as a kid, correct?
Yeah, I started out as a bellman, slinging bags when I was 17 in Long Island.
What hotel?
It was the Holiday Inn in Ronkonkoma near Long Island Islip MacArthur Airport. So
great.
And I think, like a lot of us, though, either you fall in love with it or you don't. And I found my people, and I found my business, and I really did ops for just a little over 10 years, and didn't realize that my career would end up in this incredible journey to be on the business and real estate and franchise side. But it's been an incredible opportunity and journey, and I'm blessed to have had the opportunities that have been put in front of me.
Okay, now I love that, and it really resonates with me, especially, I don't know, you always hear those stories of the people who started as a bellman or started slinging bags, like you were saying, and then now, like, you've just stuck with it and stayed. It's been a long, steady progression for you. I'm also amazed that now in hospitality, we're so thirsty for good people to work in hospitality, and it's been hard to get people to come back. I also think that this is the best time ever to start a career in hospitality, because if you can get in and you're working and you're making, and you feel that high EQ, like you said, and that love of job, I think that the career trajectory right now is probably among the steepest in all industries out there. What are you seeing? How do you speak to that?
Yeah, I mean, we've got a very large employee base at Sonesta, somewhere between 8,500 and 10,000 employees. But you're on this journey with the rest of the industry, trying to fill all of our positions, and we have significant number of open roles, and continue to do that purely as a function of some of the sort of follow-on issues with from the pandemic and from COVID. But I agree. I think the industry has to continue to do a good job to tell the story. It's hard work, but it's incredibly rewarding work. And if you have any sense of adventure, whether it's in meeting new people or in seeing the world and seeing the country, it's one of the industries that affords that opportunity. And also, I think, a lot of different debate around the cost to operate a hotel and the cost to renovate a hotel, and the upward pressure on wages, and all of that is real. But coming out of COVID, for the first time in a long time, we've got some positive pressure on rates. So maybe we can trickle that down. I think COVID also taught us how to use technology across the business in all different ways to try and cull some cost out. So hopefully we'll bring that into balance. But yeah, I think the opportunity, because some people have left the industry, there are roles, and it is one of the few industries left where literally you can start out as a dishwasher or a bellman and end up running the business or a part of the business. So if you have that sense of adventure or that commitment to hospitality, I agree with you 100%. It's a great time to jump in.
I love it. And then also, I don't know, we met a few years ago through some friends, right? And one of the things that's always drawn me to you and excited me about you is that look, there's glass half full people, there's glass half empty people, but I really feel like you are definitely on that glass half full, like abundant mindset. And that's kind of where I want to kind of dig in here, because I think the Sonesta story through the pandemic, also you finding your way there, is really incredible. Because how many properties about did Sonesta have before the pandemic started?
Yeah, before the pandemic, somewhere between 30 and 50. So it had RMR purchased it in 2012, and it had less than 10 at that point. And then RMR through HPT, SVC had a big footprint with some of our now competitors. And those assets at different times would rotate in and out of Sonesta, either acquisitions that needed renovations or impact and that kind of thing. So that was part of the strategy to have the brand to continue to grow the portfolio. But obviously COVID and the pandemic brought a couple of other unique opportunities to the floor. And to John Murray and Keith Pierce's credit, they took the bull by the horns and made some pretty big, bold decisions, along with the balance of the team that brings us to where we are today.
And what is that number approximately right now? I know it changes day to day, but
yeah, just we like to say approximately 1,200 hotels and 16 brands. So if you can imagine, in that period of time, bringing the companies together and launching the other brands, pretty incredible, bold move to make through COVID. And some of those decisions were made when we didn't have line of sight to the vaccine and the changing protocols and the snapback in travel. I mean, I think we all hoped that a return to dining out and a return to travel would be robust. I continue to be incredibly impressed with the resiliency of the public to travel, even with the sort of little bit of cloudy view on the economics right now. I think if unemployment stays strong, when you're told you can't do something for a while, boy, do people want to do it. And just that dining out and travel is such a high self-actualization component of who people are, because I think they were restricted for so long. So
totally,
we've got a nice little run as long as we can keep employment strong, I think.
So to really go from like 30 to 50 to 1,200, I mean, that's just unheard of. And I actually, when I saw you at the lodging conference, I did speak with Keith over a glass of wine. and he was kind of running us through like how the planets aligned, which really became almost a, at least in our industry, like a once in a lifetime kind of opportunity. Were
Absolutely.
you on board before that happened, as it happened, after it happened? Like, what was your story? And then, like, again, you being that glass half full person and being like, oh boy, how did you recognize that it was a once in a lifetime opportunity? And like, how are you keeping your energy levels up to keep up with all of the needs?
Yeah, I think, that's that. Give me a few minutes to weave that whole story together. I left Choice just before the pandemic was beginning. I had run new construction, the new construction business for them. So kind of an interesting time to pull back on new construction, but you can see why that sort of was the dynamic that was going to occur. So then, sat back like everybody and said, what's going to happen in the marketplace? How is this going to work? I did have an opportunity to join Domio, which was an STR company, and got to learn a little bit about multifamily business and how they use the sort of commercial engines a little differently in that space versus traditional hotel. But during that whole time, I had reached out to some friends at Sonesta, and a few friends had put me in touch. And sort of two things were happening at the same time. SVC, our capital partner, had a strategic relationship with both Marriott and IHG, in addition to a couple of other of our competitors with smaller footprints. And through COVID, something had to be worked out because there were some dynamics there that weren't sustainable. So that really is what drove the Sonesta inventory coming back into the Sonesta brand. And that was just under over 100 hotels came back from both IHG and from Marriott. And that started to create the platform of the Sonesta brand. So Sonesta Simply Suites became the mid-scale, upper mid extended stay. Sonesta ES, which had already been launched previously, got some new inventory in it. And that Sonesta ES is the upscale extended stay product. Sonesta Select, we needed to have an upscale select service brand, and that was the process there. And then Sonesta and Royal Sonesta. At the same time, talking about great minds thinking alike, as John Murray's putting that together, along with the Sonesta team, Keith Pierce, former president from Wyndham, was working through an acquisition at Red Lion, which I knew something about because prior to my time at Choice, I was at Red Lion, and they had gone through some struggles, and there was an opportunity to acquire that business. So when the conversations really heated up, it was a very unique situation for me in that I had a rapport with both John and Keith. They both were doing something pretty incredible during COVID, came together, and really the strategy, as Keith and John explained it to me, is that they could get the growth going quicker by buying a platform instead of completely building a platform, right? So the Red Lion business absolutely needed an investment, but what was sitting there? QA, PIP.com, revenue management, global sales, training, a lot of the platform elements you need for growth and franchising were already there. On the Sonesta side, big investment in the real estate, right? Already there through the capital partner. Most of the major markets covered, which is usually the toughest thing to build your hub and spoke model, and a brand that was very, very clean and still had great equity and had an upper upscale positioning. You bring the two of those together and it's the capacity to get up the ladder so much quicker and start to, drive expense savings with scale, drive more revenue because now you have more tools and to grow, right? So, and then personally, what was exciting to me is, I had my former children in my Red Lion life, and then my former children at IHG. A lot of the SVC portfolio were Intercontinentals and Kimptons and Crown Plazas and Candlewoods and Staybridges. Those were assets and transactions that I worked on when I was at IHG. So I knew a lot of the assets and a lot of the owners on both sides pretty quickly. So it was a very unique situation at a unique time. And then hopefully I was able to add a little bit of value to what those two gentlemen did because I knew both portfolios and so well. So.
Well, I just know you were at the other side of the room when I was talking to Keith. I was just like fascinated. I just heard you joke that, whether Keith or John thought that you would add value. But as I was standing at the lodging conference and Keith was telling me this crazy story of the planets alignment, like this once in a lifetime opportunity, I really got the feeling that he was like, that you were such an integral part of that because of, like you said, that the children or all the relationships that you had and the intimate knowledge that you could really kind of help bring all of this together. So I wouldn't, just from what I heard from the outside, like you're a huge part
I'll
of
take it. I'm the youngest of these kids. I'll take a compliment, whatever I can.
Yeah, it was amazing. I mean, just to kind of contextualize this for the listeners, does this Sonesta like hyper growth scenario, does it rhyme with anything from the past as far as in our industry? Or was it really just, I mean, you're talking about like a 25x growth in like less than 2 years, right? I mean, is there anything else similar?
I don't think so, but it was very unique due to the circumstance, right? Because of the existing dynamic for our capital partner and those brand relationships, and COVID really just created insurmountable challenges there. And also the recognition of, talk about your network working, right? Keith reached out to John and they had a conversation about it and really saw the vision to accelerate the opportunity that was created by bringing the assets back. But, you step back and say the most successful hotel brands did a couple of things right. And I think we're walking our own journey through that pathway, but we're doing the very key things that you have to do. You have to invest in the major markets, right? And thankfully through our capital partner and our parent company, we've been able to do that. We have great distribution in the top 25 markets, in the top 50 markets. And when I say a significant investment, I mean billions of dollars in bricks and mortar in the major markets. If you can imagine Sonesta all coming together like this, in the top 25, the only two markets that we don't have an asset in, and SVCR Capital Partners in the hunt to solve that, is in Los Angeles and Miami. We have distribution, we just need to get a marquee asset in each of those. I have had the opportunity to sell brands that are, in all different spaces across the affinity platform and the positioning platform. It's great to be able to sell off of 4 great hotels in New York and the Clifton, San Francisco, and 3 great hotels in Chicago, and incredible distribution in economy and extended stay and mid-scale and upscale, right? So when you're crafting the story of Sonesta, a lot of the things that have proven are proof points for a successful hotel company came together just so much quicker. I think the one unique thing about this was circumstance and speed, right? So other companies have deployed that strategy over time, and now they've moved to more of an asset light strategy. We believe we're different and we'll be a different type of partner because we're an owner, because we're an operator. We have that lens on the standards and return on investment, those kind of things. But the explosive growth really was a function of the vision of John and Keith and the circumstance, and that allowed the the acceleration. And then there's so many just interesting common steps along the footpath of Sonesta. Both Red Lion and Sonesta, both 1937 is a critical year for both of them around some of the birthing from the founders on both sides. And really, when you think about Red Lion, not dissimilar from a lot of other mid-scale, upper mid-scale brands, as the roads started to be paved around the country after World War II and in the 50s. In the Pacific Northwest, they really had this sort of network of hotels that fit the travel pattern of folks in the Pacific Northwest. And as the roads got paved and more accessibility happened, really had a nice launch there. Similarly, the Sonebans in the Northeast saw investment in a hotel as a way to sort of enter different verticals of the real estate business that the Sonebans were in, and Sonny and Esther saw an opportunity to be in the hotel space and loved the hospitality piece. And that sort of birthed Sonesta at the same time. And, but for a couple of twists of fate, Sonesta and the Hiltons battled out for Statler and traded the plaza back and forth and different iconic assets around the country. The trajectory could have been, very different at a different time, but super excited about, so where it is. And I think the other thing about, the RMR acquisition in 2012 is that it brought all this other finance and real estate expertise to the business, right?
Mm.
I do believe the hospitality business is different and we do have to be hospitable, but it does sit in the real estate space, right?
Yes.
And that capacity and awareness and different structures and those kind of things that do cross over, to office and industrial and to healthcare, those different sides of the business that our parent is in. It is a further demonstration of why to do business with us and why to have faith in our ability to succeed and to provide a great return, is that we have a platform of incredibly smart folks that live and breathe and eat and drink every day real estate and finance. And then we are going to protect these, hospitality brands and grow them and refine them. And that's really our job the next 24 to 36 months.
I love it. And it's interesting, like thinking about, I just had a conversation in the past couple of weeks with Jeremy Selman. I don't know if you know him. He was like co-founder of Sidell.
Okay.
He's a really cool guy, but talking about partnerships, where like, obviously in a partnership, you want to find 1 + 1 = 3 or 5 or 10. In
Right.
this case, the John and Keith coming together is like 1 + 1 = 25 or 30. It's insane.
Or nearly 1,200 hotels.
Yeah. So then to also just think on the, it is a part of real assets, right? So obviously there's a finance component, they're performing assets. The real trick also so you have this target, you have these great assets that you could bring together, merge the platform and the assets, but then you need that elephant, or what is it, the elephant gun or the dry powder to
Right.
actually make it all happen.
Mhm.
Like, how did that all come together? Because at that point, again, people are shortening up, but you were able, or John and Keith and a lot of other people were able to find capital partners through SVC or RMR,
Yeah,
other
but I think-
people. You were just able to bring it all together. Like, it's just amazing.
Yeah, imagine, when you're sitting there at the lowest levels of what COVID was doing to the occupancy, it just gets pretty thin. So you have to create your own sunlight in that dynamic, right? So the idea was, would we be willing to take the hotels back and stand up the commercial engines? And there's a cost there, and that there's a journey to do that. And check the box, they were willing to do that. And that came with hard work and investment. And that is not a, 1 or 2 year journey. That's a 3 or 4 year journey. And similarly, I think to recognize that the company could get there quicker by making an acquisition was also a strategic move, because a lot of those, give you one sort of practical example. We closed on the transaction on 3/17
Mhm.
in 2021. And we launched 4 of the Sonesta brands at Lodging Conference in fall of 21. I think we had it end of September that year. We did that in 6 months, 7 months.
God.
The speed it would take you to normally create a franchise disclosure document, determine all the fees, figure out all the technology, that can take years. But in this case, we were able to do it within months, and that journey continues. We just launched this month the franchising effort around Royal Sonesta, so we'll have something in the upper upscale space. And look, our capital partner and our parent company continue to be incredibly bullish on the business. We acquired 4 hotels in New York. Our own internal sort of little way to tease ourselves is you're not really a brand until you're in New York. So we went and bought 4 hotels in New York. So
Why not?
So we converted the Benjamin into a Royal Sonesta, the Shelbourne into a Sonesta, and then we have the 50 and the Gardens. So we'll have a Sonesta ES and we have a Sonesta Select. And along with that transaction, we acquired the rights to the James brand. So we're going through the process of evaluating that as well. So,
And that was the Denahan transaction, correct?
yes. Mhm.
Oh, wow. Cool. So there's so many brands. You said 16 brands, right? But it's not Marriott where there's 32 or 4, right?
I think 16 is a lot, but 30 is double.
Yeah, but also with the 30, it's really amazing to see how they've been able to differentiate them and the amount of work to differentiate them. And the thinking behind it is just mind-boggling. But I feel like they've done a pretty good job, a really good job of doing that. When you look at your 16 brands, where do you see the biggest growth, or what's exciting you most within those 16 brands? I know you're going to say I love all my children equally, but like,
yeah, look, there's a couple of ways you can come at it. You know, what had the best returns through COVID? You would have to say extended stay and economy was the most robust, because everyone geared down on price. And then extended stay, we already knew we were on this incredible journey with the extended stay space of our business. It just came into the fore because of technology, work from home, you know, the flexibility around the ability to travel and work at the same time. So we see demand for extended stay and for economy. But in the upscale and upper upscale space, the other thing that we have that's unique is we have market availability, right? So we have 16 brands and great distribution, 1,200 hotels, you know, eighth largest hotel company in the US. But in a lot of the major markets, some of our competitors really are out of product, right? So the fact that we have market availability in basically every market with almost every segment also just creates an opportunity to have a different type of conversation with the prospective investors and joint venture partners and prospective franchisees.
Yeah, it's like a blue sky moment, right? It's really, I mean,
some of our competitors are at 4, 5, 6, 7,000, and we're at 1,200. So we've got a lot of work to do the next 5 years.
Totally. And then I'm just trying to, so, and of the 16 brands, I guess, so you have the blue sky moment, right? So it's really the sky's the limit.
To get into the brand family, we really don't have too much crossover. Again, a few happy coincidences. So just take the vertical of extended stay for a minute. Sonesta ES was positioned as upscale extended stay. So the competitive set there is Homewood, Staybridge, and Residence Inn. Sonesta Simply Suites, upper mid. The competitive set there includes Candlewood and Town Place, a little bit of Woodspring, a little bit of Echo, depending on the key count and the price point. And then Guest House Extended Stay was our sort of economy to mid that Red Lion was working on. More of a competitor like Suburban Studios, where you take a traditional guest room and put in some extended stay amenities, storage, and refrigeration, those kind of things. So again, you said, you know, 1 + 1 = 25. That's another example where it wasn't necessarily set up that way, but it just fell in to place that way. You know, at the top of the food chain in the Red Lion business was RL, but it had never really gotten the distribution, right? So we didn't have too much crossover there. And Red Lion Inn and Suites are mid-scale. When you move to upscale, Sonesta Select and Sonesta Hotels, you know, very clean, you know, positioning, right? Sonesta Select is upscale, but with a limited food and beverage offering. The competitors there are Courtyard, Hilton Garden Inn, Cambria, right? Sonesta Hotels, upscale, full serve, right? So Marriott, Hilton, Doubletree, Delta, Renaissance, Crowne Plaza, and then Royal comp set there includes, you know, JW, Intercontinental, and those kind of different brands. So pretty clean positioning for the different ways that the consumers have grouped themselves together and the way our industry has grouped the brands together. So very thoughtful. You know, there's some white space and we're working through that. And we're working through some things with the James, a few gaps, but not a lot, and not really any crossover. So pretty excited that this is a pretty good set of brands to feel the playbook from.
And it's almost like, and for those of you who don't know much about this transaction, you could say it sounds like, oh wow, it sounds like really lucky that it happened. I just think, again, it's that maybe there's a little bit of luck, but it just seemed like these two entities were just kind of cruising together and had a shared vision. And I don't know, it makes me think like, I don't really know John, but just in meeting Keith, it's like one of that old adage, like the harder I work, the luckier I become, right? It's just like, I think there's those visionaries who are always deal makers that are always looking to like make that happen. And then this just provided that once in a lifetime moment.
Yeah. And to also have a few of those critical success factors already in place, that we had an investment from the parent company, that we had the major markets covered. You know how critical that is. If the hubs are set, you can build the spokes and the extensions. But if you don't have the hubs, it's critical. And then I think the other thing going into COVID was, there was starting to be some tension just in the industry around, deliverables for the owner, and performance and getting the standards calibrations right. We've got a natural governor on our standards and on our positioning because our capital partner owns the hotels, the Sonesta, a chunk of the Sonestas. We do now have just under 60 franchise Sonestas as well, but the lion's share is still on the owned side, just over 200. And then on the RLH side, that's where the lion's share of the balance of the franchise business came from. But look, we're excited to continue to stitch the business together. We've done a lot of work on the finance side, legal, HR, back of the house. And I think the fun, more commercial side for the consumer is the exciting part that's coming, where we start to do some more of the integration in the public facing part of the business. But Keith and John have us on a very specific true north around leveraging the scale and reducing the cost and taking advantage of the size, driving revenue into the hotels, and growth, right? Because you've got to be where the consumer wants to go. And look, we also had an advantage in the portfolio in that in the Pacific Northwest, we had the drive markets covered and a lot of the national park dynamic covered, and that was critical through COVID. And we had a lot of destination markets covered with Puerto Rico and Hawaii and Florida distribution that helped on the Sonesta side. So as the markets recovered and reopened and the different states calibrated their approach, we were able to give people, experiences under the new joined up business. But, we're nearly 10,000 employees, right? If you can imagine. So one of the largest hospitality employers, in addition, just to our distribution, 8 countries, 3 continents, 16 brands. I think you mentioned it, it's just the speed at which we got there. And then, there are pretty clean lines. Each of the boxes that we took into the family were built in order to drive revenue and take care of a very specific consumer. So whether it's upper upscale and the Royal Sonestas with the extra amenities around fitness and sometimes spa and the extra food and beverage elements and outdoor elements, that's there. For Sonesta, solid upscale 3-meal-a-day restaurant, fitness, and the meeting space, Sonesta Select. They're each built for a specific consumer, and the boxes were created so that you could drive revenue through them, right? There's a business model that works, and all the way down the line, mid-scale with Red Lion, and then, Sonesta Simply Suites, we won for the J.D. Power Award for Sonesta Simply Suites. So, that brand was pretty darn new to win, that for the extended stay piece. And then America's Best Value Inn also won 2nd place in the J.D. Power. So hopefully we'll win more and more of those down the road. But just that we could punch through with 2 of the brands that quickly is also
unreal.
That the brand teams can be incredibly proud of.
So as you were speaking, I was going back in my mind to the financial crisis. Like, having lived in California forever, there were Wells Fargo banks everywhere. I never saw one on the East Coast. Then in the financial crisis, Wachovia, I don't know if anyone ever remembers that bank, they got acquired by Wells Fargo. And then all of a sudden, it seemed overnight, every single Wachovia had a Wells Fargo ATM and a sign in front.
Right.
So taking that example of just signage as one example, how the hell do you change the signs on 1,000 hotels seemingly overnight? Like, how do you do that?
Well, the advantage was on the RLH brands, that signage didn't change. So America's Best Value Inn and Guest House and Red Lion, that all sort of stayed the same. On the Sonesta assets, though, that came back from the other affiliations, we had to get after that. So there was a temporary signage experience, and then the ordering and trying to get everything sort of manufactured and through the supply chain during the toughest time of COVID, and then to get the output. I think There too, we had a happy coincidence in that when the permanent signs started going up on the buildings is right when the travel started to ramp up. And, that was different numbers have been thrown around, 6 million, 8 million, 10 million, but that was just that amount of investment. And just the sheer number of signs that went up was an incredible way to start to drive, the awareness. And then, we also had a unique experience where our capital partner brought some assets to market. About 70 assets were brought to market by our capital partner, and we were able to retain, either through franchise or manage, just over 60 of those assets in the family. And the ones that traded away, for the most part, moved into the multifamily space. So that was an incredible way to create value and create a way to accelerate the franchise effort. And we ended up with about 18, 19, 20 franchise groups, franchise owners across those 50 or 60 hotels. And they've been a great group to work with and to advocate for us and continue to grow with. So that's been an exciting process that we're just finishing up the tail end of that.
So that's another interesting question. Like, if I were a franchisee or a potential franchisee, I'm looking at all the different offerings out there from all the different brands. Like, what would I find most attractive about coming to Sonesta?
I think there's a couple of things. My top three are market availability. Market availability is one. Two is access to our executive team, right? We're small but mighty, so it's kind of fun. You can call the CEO, you can call the president, you can call me and really brainstorm through on the deals. That market availability is critical. And then the third piece that seems to land so incredibly well, and I've seen it work already, is just that owner lens. The fact that our capital partner and our parent company own hotels, and that we have such a strong management business, means that we are constantly looking for ROI. We are constantly looking to have standards that are rooted in what the consumer needs, but that are also rational, right? And then, the incredible follow-on commitment by our capital partner. At the beginning of this year, SVC jumped out and mentioned that they were going to spend between 400 million and 600 million in renovating the Sonesta assets, right? So they've launched the brands, and they're holding themselves accountable, just like we're going to hold the franchise community accountable. So we can tell the story now, and then in 24 to 36 months, when the entire system is renovated, we'll be able to come to the market and further tell the story to the consumer and the development community. Similarly, I talked about Miami and LA. That's a stated goal of our capital partner, to enter into Miami and Los Angeles. So the power of that commitment to the bricks and mortar to renovate them and make sure that we're setting a good example, and two, to get into the one or two markets we don't, that cannot be short shrifted as a critical success factor too. But specifically on the franchise side, what we hear from everybody is they like that we're an owner, and they like that we're an operator, that we have that lens.
Hey, Brian, when you think about the 400 to 600 million in CapEx you're going to unleash, right? I'm always curious how hotels measure the ROI on that. So they're going to invest all this money. How do you know that the money invested, how do you verify that the money invested is going to drive higher rate and occupancy?
Yeah, there's two or three ways that you sort of underwrite a PIP or a CapEx renovation. One is, what happens to my performance if I do nothing? Right. So you can look at your performance, and you can look at your comp set and where you fit in the comp set. Are you outperforming? Are you even? Are you underperforming? And if you don't take care of the product and don't continue to meet the consumer where they are, what's the risk trade in your performance, right? So that's one way. Two, I always like to check for headroom in the market, right? So is there ability to perform better, either my individual asset or as the market inflated, right? Is there ability to perform better, right? Because we know that new wins and we know that renovated wins. So if you make the base case, what if I do nothing? What happens to my performance? How long can I hold where I am with the performance? Is there headroom? Can I outperform, right? And then I think the third piece is, as everything gets accelerated with the consumer from a technology standpoint and a use case, we've got to react quicker, right? There's a lot of changes around food and beverage. There's a lot of changes around in-room experience. There's a lot of changes around what they expect from the frequency program. That investment is also a table stakes component that if you want to be in the space and grow, you've got to have good, examples to grow from. But what I've been so impressed with is the discipline process that our operations team and the brand team, and then the asset managers from the ownership have gone through. They want to have great hotels that are great examples, but it has to make business sense, right? So there's both of those tensions in the process around return on investment, meeting the consumer where they are, but the investment has to have a return. And you can measure that by, stop loss, not losing your position, inflating your position, and outperforming, right? So you can just run a business model with all three of those. But I think the other—
So you're measuring, so you're out.
Oh, go ahead. Sorry.
Oh, no, I was basically saying, so you're basically allocating the CapEx. You have a plan to outperform, find new limit to kind of really turn up the volume on what's happening. Once it's all done, how do you guys go back to verify that, like, hey, you were on target, off target, or what we learned, we need to do something different the next time?
Yeah, from a Sonesta standpoint, we have our parent company has an asset management function, and that's where some of that discipline comes from. And then SVC and RMR that are going to write the checks, they're going to want to return. So there's a check on the ROI all along the way. And I think that's part of what makes us attractive to the franchise community and the investment community, is that a very similar process that they would go through in evaluating the franchise options, we have to do in-house before anybody asks us to, right? And then I think, the overlay to that is if we end up with great assets that have a return, there's the proof point, and that is our job as the franchisor and the brander to set a good example, right? But doing it with that owner's lens and that asset management expertise means it should be more rational, and it should be driven around the things that actually move the consumer, just to give you more of their share of wallet when they're traveling.
I also think deploying that capital now, as they talk about, oh, there might be a recession or this or whatever is happening, I feel like when that is allocated and the work is done, you'll be ahead of the comp set, correct?
Yeah, I mean, the goal is always to be ahead of the comp set, but I think we're going to take our rightful space in each of these segments, and I think what the investment community and the development community and the franchise community can count on is that we're putting our parent company is putting its money where its mouth is, right? That we're not going to ask you to do anything that we won't do ourselves, and that there is a commitment from the capital partner to get these hotels renovated, and which creates a risk amelioration to a franchisee who might spend the money, to do it. And then all of those 50 to 60 franchise hotels that are now on this through the Sonesta brands, they also all have a renovation requirement around that same time frame. So it'll be really exciting to go back to the market and talk to the consumer, look for those improved performance, but also look for that connection with the consumer.
And do you have a rule of thumb for what kind of ROI on that war chest of capital that you'll deploy to renovate the properties?
Yeah, because I'm not an officer of RMR or SVC, we try and keep a little bit of a healthy boundary there. So I don't want to go into their expectations. I think the message is, though, that ROI is implicit, and these are public companies that need to drive an ROI, and if that creates some confidence in the Sonesta brands, we'll take it. It's great to have a parent and a capital partner that wants to spend money. I'll leave it there.
Yeah, no, I love it. As you look at this growth acceleration, driving scale, so right, you're obviously growing just in number of properties, you're growing revenue, you're reducing operational costs, which is like the true definition of scale. What's exciting you most about this confluence of everything as you look forward in the medium to long term?
Yeah, look, I think the resilience of the traveler is probably my most happy surprise through this, right? We knew that there was going to be a snapback. I didn't think it was going to snap back this strong, and I didn't think that the snap was going to be as sustained. And I truly believe whether we technically go into a recession or not, if unemployment stays low, people are going to spend their disposable income on dining out and traveling. It's moved up on, their version of Maslow's hierarchy for all the reasons that we know. And then technology has enabled it, right? We're all on a journey with back to work, but that's going to come to life a lot of different ways, but it creates a whole bunch of different stay occasions and different types of experiences. So I'm going to continue to watch that resiliency of the traveler. I think we have been through a lot. If you think about the Fed raising rates and the election and capital markets and all of that, we're through some of that. I think we'll have to continue to watch the Fed. But if we could get a little stabilization in the capital markets and the debt markets, that'll also be a bit of a platform, for the next step up. And then, I'm just excited to see the innovation and the renovations that come through, because I think we are at a very unique time where we can reset a little bit around the relationship between the franchisor and the franchisee, and also around the consumer, right? I think it's our obligation on the brand side and the franchisor side, to flip over a few rocks and make sure that the service profile and the things that we are providing are the critical ones that the consumer wants, but also where we've learned that the consumer's willing to be more flexible than we expected around food and beverage and around housekeeping and around using technology with check-in. Not that they're ever going to give up table stakes things like cleanliness and service when you need it, but there's a lot there that we can right size to provide return to the owner, continue to provide good service, and to, with the new brand, have the brand stand for some of those, different elements. So some of the things we're not ready to announce today that I know that are coming are pretty exciting in that those arenas. I think, watch the space that the James sits in, watch the space that Royal Sonesta sits in, watch our approach to food and beverage. There's some really exciting things coming, in the first part of next year. And look, these are great canvases in which to work. And you think about, the design community and the architecture community and the development community that you and I are so close to and have so many sort of friends and family in, it's just going to be an exciting time for that group to work with Sonesta because of that commitment to that big spend. And this isn't, when I say the $400 to $600 million, that comes right from SVC's investor relations page. That's just our capital partners' commitment to their 200 plus hotels. That doesn't include all the franchisee investment that's going to come across the other 50 or 60 hotels. And then the continual investment that comes from the former Red Lion business, right? So you just, not many brands can step out and say, we're going to have nearly or over $500 million spent on the system over the next 24 months. God. Pretty incredible bet by our capital partner. And that should also be a confidence builder for the potential franchisees and investors and JV partners.
I love it. And, going back to the beginning of the conversation and thinking about just abundance, excitement, acceleration, growth, like I'm feeling it all, like just in talking to you and also Keith at the lodging conference, like I'm seeing it. And it's almost like I didn't even know all of this was happening. It's like an underreported story that I think we all just need to be mindful of, because I think good things happen when you come from a perspective of abundance.
Yeah, it's so interesting because I think last year in the industry trades, we were one of the good news stories, right? There weren't a lot of them, and we were one of them. Just the growth and employment opportunities and those kind of things as everybody was going through all the struggles. But the most one of the most interesting things that we've been going through right now is just going back and learning about the origin stories of the Red Lion business and the Sonesta business. And, Sonny and Esther did that.
Well, that was my other big takeaway. Sonny and fucking Esther. That's amazing. Like, I didn't know it was Sonny and Esther, and I want to know who they are or who they were.
Yeah, I mean, one of the greatest stories, that I heard was that their first deal they did, the Preston in Massachusetts, they did with 5 partners, right? So as the development lead, you go, well, that's just great because partnership is sort of in our, in our DNA. Same thing on, on the Red Lion business. That was 2 partners that came together with an idea, seeing the market change for, mid-scale lodging and sort of the paving of the roads and all those kind of things. And, I think it was the Thunderbird in Portland, Oregon, Motor Inn where it all started, but that ended up morphing into Red Lion and Sonesta. A lot of different firsts. You go back to 1968, the year I was born. That's the first time they went international, if you can imagine, when the Sonnevids were the owners, right? So, and all these incredible different stories. 1999, they launched Sonesta Posadas with our partner GHL. I was just down at one of those assets. These incredible experiences in Central and South America that the guests can have in a really organic, genuine setting, just sort of incredible. And on and on it goes. The current company as sort of organized really does go back to, the relationship with RMR and the businesses, coming together. And then, the pandemic really allowed it to be optimized in a way that probably was not completely, probably accelerated a lot of the ideas that were sitting in the boardroom for the company down the road.
Well, I think as you guys continue to bring it all together and really kind of attach yourself to that rocket ship of growth and scale, I think so many of those stories are going to come out. Everyone's been talking about storytelling and storytelling and storytelling. I think that there's so much that could come out of this. Now, I want to go into a time machine for you. So I know you said you were born in 68. You must have a great filter on your camera because I feel like you look so much younger than I do.
Yeah, I'll take it.
And you are older than me, just for the record, everyone.
You look pretty good too, Dan.
Oh, thanks. You look really good. You look really good.
Well, you let me set my own lighting, so come on,
I see. If you were to go back, what was the name of the hotel where you were the bellman?
It was a Holiday Inn in Ronkonkoma, New York.
Ronkonkoma, that's right. So if you were to go back to that Holiday Inn in Ronkonkoma, you right now, the Brian I'm speaking to, you're in front of your 18 or 19-year-old self. What advice do you have, given all of your experience and all the cycles you've been through, to your 18-year-old self checking bags?
Yeah, I think I'll take one further step back. I would tell everybody, find something that you're passionate about, right? Because I still, more days than not, when I'm heading to the airport to jump on a plane for a trip, there's more butterflies than trepidation, right? It's hard to travel and it can be exhausting, and COVID and 9/11, and there's been a lot of challenges put in our way around travel, but it continues to still excite me. And I go, what is that rooted in? I got that job. I fell in love with it. I like the energy level. I like the human component of it. The other piece is, Kemmons Wilson used to say half luck and half brains. I had some incredible mentors along the way that, I'm sitting in the hotel and get a new food and beverage director. There's a lot of downtime when you're the van driver and you're the bellman. He invites me into the kitchen and into the storage room and into the liquor room. It just starts to teach me, food and beverage cost controls. I didn't necessarily know I was learning them, but how you take an empty bottle out of the bar and you only replace the full bottle, and how you stack the meats in the refrigerator, and when you write the food off against the expiration date, and all those kind of little things. And that was, was that luck or brains or faith? I was in the right place at the right time, but I was open, right? So find something that you're passionate about and then be open. There's always opportunities to learn, put yourself out there. I did 10 plus years in ops. I didn't know I was going to end up in, finance and real estate and the franchising side of the business. Gravity took me there over time, but I really was in love with ops at that point. But I had these incredible opportunities 2 or 3 times to accelerate through my ops experience. Training is always something that's tough nowadays, and it's tough in some ways, but also there's more training than ever, right? You can get online and find out a lot of things about how hotels work and certain brands work and certain technologies work. Go take a moment and to get yourself educated. And when something new comes along, jump onto something new. I was in New Orleans in operations, revenue management. We're going to now do revenue management, something new. We had to have all this training, and this was in the 90s, post the sort of end of the Gulf War, and I think just at the end of that little mini recession. And we had 2 hotels in the French Quarter. We let the humans manage the yield on one, and we let the system manage the yield on the other. And of course, the system, beat the humans because it could see the cancellations and it recognized the revenue across multiple days. And that's just something you can't see when you look at the inventory. But again, we had 4 hotels in New Orleans, and I was the number 2 at the, I guess, rooms, doing rooms, guest service management at that time. And some of the hotels wanted to participate. I'm like, yeah, I'll participate, right? I got exposed to the franchise side of the business, learned revenue management before it was ubiquitous, right? Helped that company launch it. So that was another leveling up, right? All of a sudden I had the new tools. Because I was lucky enough to be exposed to them and had an incredible team around me that allowed me to go learn them. That was an accelerator, right? So I think find something that you're passionate about, take advantage of any and all training, and then push in a little bit, right? It took some guts for a 17-year-old, bellman to say, yeah, I'll go. Tell me about this. How do you handle the liquor room, or how you handle the kitchen, how you handle the storage of all the food, and to hang in there and learn it was incredible. But to think all of that has come together with 2 portfolios of hotels that I care about, with 2 and an executive team that I respect, with an incredibly well-capitalized parent company. It's a pretty exciting time, and I recognize that maybe more luck than brains, but that I'm in a unique spot and happy to be sitting in the chair, and I'm sort of can't wait to see what happens next.
I love it. Let's not sell yourself short. Let's just say it's luck and brains. Okay.
Great.
Luck
Yeah.
and brains. We're not going to skew it one way or the other. I think something that resonated with me, and it reminds me of many conversations that I've had over the past more than a year on this Defining Hospitality podcast, is this idea of open-hearted listening, being open-hearted, especially in the operations of a hotel, because there's so many different channels of business that you could just go and work in a hotel and learn so much about everything, whether it's F&B, how to treat guests, how to connect with people,
technology. You're exactly right.
It's all there. It's like a little entrepreneurial laboratory, each hotel. And it also just seems to me like everything seemed to be so disjointed that you really need people to kind of like tie it all together. I know you keep talking about technology, and I think that the platforms are evolving, but it still seems like everything has, you need people to make it all come together.
Yeah, look, hospitality, you think about where we are just culturally and post-COVID and everything that's gone up, right? A lot of division, a lot of disruption, a lot of calls for greater diversity. Hospitality is one of those beautiful things that sort of works across all 3 of those, right? Everybody's money is green. Everyone has an aspiration to travel. It's part of the human condition to climb up the mountain and look over the other side. So let's take advantage. Let's take the win. Hospitality is a place where we can not be disruptive, where we can embrace diversity, where we can come together, right? Everyone loves a great drink. Everybody loves a great meal. Everybody loves to travel at all the different price points and, have all the different experiences. So I just think this is an incredible time for hospitality. You sort of framed it a different way as sort of someone entering the industry. I also think for all of us that are leaders in the industry, let's show that we can be the opposite of those things and bring people together. And then, as it relates to the franchisee relationship, I just think it's one of the most powerful ones ever created in American business. People take their phones out, and say, well, I don't know anything about franchising. Well, almost everything on that iPhone or on that Google phone or whichever one you have, is all licensing, and licensing is a form of franchising, right?
Yeah.
You want to take a brand to the masses, there's usually some franchising or licensing effort underneath it. It's really the only way to scale up, right? So if you've got a great idea and you want to bring it to the masses, it's that critical business element and business partnership between the franchisor or and the franchisee. And then I think lastly, it is our journey to bring other people on the journey, right? I was telling you about the circumstance that I had where the F&B team, introduced me to that piece, and the tech team introduced me to the revenue piece. It is absolutely, our job at this point in our careers to bring other people along. And that's been an incredibly, fun part of it. And now I have, some folks that I've been able to do that for, and I want to do it for others and be mindful of that responsibility, going forward.
I love it. And you're speaking my language, man. So I appreciate that. If people wanted to learn more about you or connect with you, what's the best way?
Yeah, I think LinkedIn is an easy way to connect. And then the Sonesta development website, either one of those.
Perfect. And we'll put those in the show notes. So Brian, this has been really just so incredible. And just, I'm feeling filled up, and I'm feeling like, I don't know, I just feel very abundant right now. And it's right, we're recording just before Thanksgiving, so like this was a great cornucopia of a conversation. So I thank you very much.
My sign off was going to be, I am thankful for your podcast and for your interview, and I am thankful for Dan Ryan. So have a happy Thanksgiving, everybody.
All right. And you ain't seen nothing like the mighty Quinn. So thank you to all of our listeners. Again, I say this every week and I'm just humbled by it. Our listenership, it grows every single week. So we must be speaking about stuff that people are into. So if this has changed your opinion or way of thinking about hospitality or abundance or entrepreneurism or franchising, please pass it on and share it with a friend. So thank you, everyone. And we will see you next time.